all shots. What's cool though, good morning, Danny. And I'm going to tell you guys this right now. It's pretty cool. What we're going to do is we're going to learn to read indicators. My job is to teach you to look at the software and really just to see advantages and to say, because I have these advantages in place, because I can define an edge, if you will, um, it's time to enter the market. So you're going to make great decisions on your ability to read the indicators. And I'm here to make sure that you can read those indicators. Do, 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 do. So we're going to learn to read charts, guys. This is it. And I'm not sure how old everybody is in this room, but I'm going to tell you, if you remember Pac-Man in the 80s, if you remember video games even in the 90s, there were all these patterns. And if you had the patterns, you could play forever. 1 quarter. And that's kind of what day trading is that I found. That's one of the best analogies I can come up with, is we're going to look for a pattern. And what we're going to do this morning is we're gonna use a checklist. I'm going to hand everybody in the room a plan. The plan is a stepping stone in your learning journey. I will talk about NinjaTrader, so you'll have the NinjaTrader plan. It is a checklist for entry and how to help you manage it. If you're on TradingView, there's a TradingView plan. It's a checklist for entry and how you're going to manage it. So what we're going to do is we're going to use 3 rules, 2 charts, and you guys are going to build a foundation. And you're going to learn to recognize advantages, and you're going to turn those advantages into a trade. Chart reading is about 90% of the typical day. Active trading falls into about 10%, guys, maybe even 5%. But you're going to understand through your chart reading where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. These concepts become ways to enter, to manage, and then I think most importantly, to embrace the 90%. The market does this, and this is I don't speak in a lot of absolutes. This is darn near the only one I will, guys. The market goes up, the market goes down. So there's 3 things you can do as a day trader. You can buy the market when it's going up and go up with it, hopefully making profits. You can sell the market when it's going down with it, hopefully making profits. Or you can wait. You can simply say, I don't have the advantages that I need to feel like I have an edge, so I choose to do nothing, and that's the 90%. When a trend is established in the market, there's almost always a little fight, and that's what the thin little arrow is. What we're going to do is we're going to take the trend trade methodology, 3 rules, 2 charts, and we're going to pinpoint right where that fight is most likely to be lost. That is you're likely to continue with the trend. This spot will be your entry for the trend trade. And if you can wait for that fight, guys, you can take a trade that's been proven to win more than it loses. Hey, Daniel 3, good to see you back in the room. So learn the easy trades, guys. You will find more, and what we're going to do is we're going to learn the rules. I do talk about TradingView as well as NinjaTrader. I'm going to tell you right now that they are very much apples and oranges. While the indicators are very similar, the methodology for entry is going to be different because of the time structure. So if you're on NinjaTrader, guys, make sure you're paying attention to the first part of class. The first 30 minutes we'll go through the NinjaTrader rules, and then we'll follow it up with the TradingView rules. Your job is to know which platform you're on and learn the rules for this one trade, this one high probability trade. The easiest way to get to where you want to be, and dare I say the fastest way to get to where you want to be, post in my room, guys. If you are not comfortable taking pictures, I would encourage you to start the habit now. Start taking pictures now. Start annotating charts now. The more time you put into pictures and annotation, the faster you're going to get to where you want to be. Every time you post in my room, you get a private session with me. One of the things, and I like to say it like that because people send me messages all the time. Mark, I need a private session. Guys, I don't say anything outside of this room. If you and I are face to face in the street, I'm not going to give you different answers. I will give you everything that you need. And if you post in the room and tell me how you're reading your indicators, we'll just make sure that you're reading them right. So you can drop a picture in the room and you can say, Mark, this is what I saw. This is what I did. This is where I did it. This is how it turned out. Do me a favor. Could I have done it better? And when you do that, we'll identify the things that you're doing great. And guys, I am a victory celebrating kind of guy. Learning a new task is daunting, and I know that it can be frustrating, so we will virtually high five every chance we get. But you will become a better, more confident, stronger trader through the mistakes that you make. So I want you to embrace mistakes from day one. I want you to say, you know what? I'm brand new. It's cool if I F it all up. Mark's going to teach me how to fix it. I see the apples, guys. Thank you. The second thing, guys, keep it simple. Um, there are about 75 bajillion indicators um, in the world, and all the time frames, guys. We're going to keep it super super simple. Um, you've got to learn the looks. So what I teach is a pattern. That pattern is repeatable, it's testable, it's verifiable. Learn the pattern. And when you learn that pattern and you know what it looks like to have your rules met, the market slows down. You will call your shots with this methodology. So keep it simple. In the spirit of simplicity, for my NinjaTrader users, I have created this on my other screen. This is the NinjaTrader tracking sheet, guys. It takes the 3 rules that we're going to talk about and gives you about 150 pictures so that you can commit them to memory. The second tab is client trades posted in the room, the exact pattern that we're about to talk about for the next 30 minutes. There's a place for you to put your pictures, and there's a trade tracking sheet. Now, the trade tracking sheet is huge in your education because every time you take a picture, you're going to drop it in here. It doesn't matter if you win or lose. I can't stress that enough. If you're on simulator, take all the losses. We'll learn how to avoid them together. But there's a section for feedback in class, and this is where you're going to be able to identify the things that you're doing well, because we're going to high five and be like, hey, wow, great job. I love what you're doing here. And then I'll also say, hey, I notice that you're trading into these termination conditions and you're losing more than you win. I notice that you're early on your entries because you can't stand waiting and it's just costing you bigger losses. Here's how to fix it. So go back every morning and study that trade tracking sheet, regardless of what platform you're on. And if you do that and you ask yourself what worked and what didn't work, what happens is you begin to see the good and you begin to want to avoid the bad. And guys, this is what really sets you in to becoming that confident trader, because you're going to realize that the rules work and you're going to want to wait for the rules and you're going to be excited to wait for the rules. So we're going to talk about the rules. There's only 3 of them as advertised. These are the NinjaTrader rules, guys. This is your highest probability trend trade. This is a trade that when you learn these 3 individually, guys, don't even worry about a trade yet. Worry about learning each rule on its own, because when a rule is true, it creates an advantage. These advantages initially get you into the highest probability trend trade ever. But the idea of momentum and nothing in the way, your first 2 advantages from the first 2 rules, this is enough to build your own plan. This is enough to build a consistent plan. You're going to see a lot of people in this room leaning on these 2 real heavy and not even worrying about trend trades anymore. But each rule is an advantage, and a trade is the accumulation of the advantages. It only takes 2 charts. There is a large chart. This is a big slow chart, guys. This is your 13.2. It takes 1 bar on this chart to really give you and show you the overall opinion of the market. Direction is defined on the large chart, so you know which way you're looking for your rules to be met. Momentum, that first advantage, happens on the large chart, and the areas that can be problematic, those areas where the market may stop, where it may go. Guys, these are all on the large chart. And honestly, it takes 1 bar, the most current bar on the large chart, to define direction, momentum, and areas. So I don't know how to make it any more simple than that. And when the rules are true, we're going to go to a small chart, a faster chart. And this is where you'll see that little fight that always seems to happen when a trend is established. You're going to use the smaller chart to define your entry. Rule number 3 is very specific. You will call your shots. This will allow you to reduce risk. This will also allow you to maximize your profit potential. The small chart is just an entry chart. It's going to get you in at the best of the best spot. And I love this metaphor. Who are you trading with and who are you trading against? If you're following the KISS plan, you're trading with the large crowd. Large crowd is your large chart, guys. They establish trends, they create momentum, they react at areas, and the large crowd typically wins. The small chart, I want you to think of them as the small crowd. And these are the people that still have way more money than us, and they're way more popular at parties, and they have nicer things, and they create that fight. They create what's called a retracement. And a retracement is a small move in the market that is counter to the underlying trend. This is where they try to buck the system. Rule number 3 is going to put you into the market right where the small crowd is most likely to lose their fight. That's your entry rule. That's that little blip. And we're going to use indicators to do it, guys. We're going to use triggers and areas. We're going to talk about areas first. Areas, I'm going to get real technical here, so brace yourselves. Areas are horizontal lines on a chart. One is not more important than the other. Areas are bouncy. That's the easiest way to think about it. Areas are brick walls. Areas are electric fences. Areas are places where the market may bounce. They have names. There are divergence highs. It's a magenta line that prints off of a pivot if there's a loss of momentum at that pivot. There's divergence lows, same thing from a low. You'll see Fibonacci resistance, Fibonacci support, yellow 1-to-1s. None of these are more important than the other, guys. And when the market is trending up, divergence highs, Fibonacci resistance, and yellow 1-to-1s are all what we consider areas of resistance. Resistance is like a ceiling. When the market is trending down, divergence lows, blue Fibonacci support, and yellow 1-to-1s are all areas of support. Support behaves like a floor. We're going to use them on both charts to not only define where the market may stop, but we're also going to define where the market may bounce and continue with the trend. So areas are horizontal lines that are bouncy. That's your technical term. Triggers, well, technically they're moving averages. I'm not very mathy, so let's do it this way. There are small triggers. 2 solid lines create the small triggers. There are large triggers. 2 dashed lines create the large triggers. Small triggers are fast. Large triggers are slow. When they're green, they're up. When they're red, they're down. That is as in-depth as you need to get on the triggers. One of my favorite sayings is you don't have to be able to build a watch to tell time. So keep it simple. Triggers are going to define momentum, rule number 1. Triggers are what we're going to use in comparison to those bouncy things. To make sure you're not trading in determination conditions, that's rule number 2. Large triggers will also be used for your amazing entries where you pinpoint where the market is most likely to continue with the underlying trend. So triggers and areas. Only 3 rules. Excuse me. I am fighting those Georgia pines right now. The large chart, the big chart, the slow chart has to have strong trigger lines. That's rule number 1. And when rule number 1 is true, you have the advantage of momentum. Strong trigger lines tends to be the easiest lesson that you'll ever get. When the background is green, the market is going up. When the background is red, the market is going down. In order to have strong triggers in an uptrend, both small and large triggers must also be green. In a downtrend, they must also be red. And it's one look to define strong triggers. You guys will dig this. This is how easy it can be. One look. There is separation between the small and large. So in an uptrend, your small triggers will break above and away from the large triggers. Looks like scissors. They are open. They are ready to cut. In a downtrend, smalls below the large, space, scissors are open, ready to cut. When your scissors are open, and strong triggers has nothing to do with price bars or areas. When the smalls separate from the large, when the space is there, the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is what you're going to hear in the room all day long. Odds favorable pushes a market. Odds favorable can break key areas. Odds favorable can cover up the mistakes that we tend to make as new users. When your scissors close, strong goes to weak. Odds favorable turns into anything can happen. So it's very black and white. You either have momentum because of separation or you do not. Only one of them has you looking for rule number 2. And I took a picture this morning. What's it look like to have momentum on the first bar? That's it. That's what your market's going to look like. Has nothing to do with the horizontal lines. Has nothing to do with the price bars. It doesn't know what market it's trading, guys. Separation is strength. Can you guys give me a why if that makes sense? Look at that. Separation is strength. When the smalls return to the large, that's weakness. Look at the market retracing. You guys want to see something cool? These little tails on that big chart, that's that fight from the small crowd. Dollars to donuts. We're going to find some entry rules met at those lines. But you've got to get through the first two before you can get to the final, guys. Momentum is strength. Momentum pushes the market. Momentum is definitely rule number 1 for a reason. Rule number 2 says no termination conditions present. Don't trade into a brick wall. Guys, this is what it's like when you trade into a termination condition. You think it's going to go, you hope it's going to go, you're wishing it's going to go, but more often than not, you are stuck like Chuck, guys, and it doesn't go. So termination conditions, when there are none present, will make sure that you have room to profit targets. And when you have room to profit targets, we're just going to call it a clear path. That clear path is money. That clear path is going to set you up for success. So when we talk about a clear path, I want you to understand those horizontal lines on a large chart, that's where the large crowd is making decisions. That's where the buyers are buying, the sellers are selling, the fights are happening. So it's an easy recipe. I'm a huge language nerd. I think language is important. I think if you learn these basic phrases, it'll set you up for success. Separation is strength. That's your first phrase. Second one is when price reaches an area on the large chart. Price reaches a line. Price reaches resistance. Price reaches support. Once price gets there, that sets off the decision-making process. That's where the large crowd has to decide. Do we want to push through the area? Do we want to fight one another at the area? Do we want to reverse the market completely at that area? And guys, you'll never be in tune with what they want to do. They don't send out a mailer. So when price reaches an area and the large crowd gets there, all you have to do is count trigger lines. So ask yourself, where are my triggers? If none of your trigger lines, if all 4 trigger lines remain below resistance, if all 4 trigger lines remain above support, you have reached an area that could stop the market. Now watch this. It could stop the market. It might reverse the market completely. It may create a bounce. It never should. It never will. It never has to. It's important that you understand that you're not in control of the market, but this very simple recipe is going to keep you out of a lot of trouble. So if price reaches an area and none of the triggers get above it, it's a termination condition. Absolutely no trades into that area. Does that make sense, everybody? I'm trying to keep it very, very basic right now. It's a Monday, but here we go. Price reached Fibonacci support. Look at the bounce. Price came back up to these 1-to-1s in mid-band. Look at the bounce. 1-to-1s, there's a bounce. Support, there's a bounce. Resistance, that's where the top started. Support. Guys, they know. They know where these lines are because they created these lines. It's going to be hard, but you'll be able to not trade into them if no triggers go through. So if they don't reverse, they break. Once again, your trigger lines will tell you what you need to know about these areas. So every line you reach is a termination condition in the moment, guys. Price is going to get there before price bars. It is almost a never, but not 100%, that your triggers would ever get to a line first. So if price reaches support, triggers remain above, sit on your hands, do nothing, wait for the reaction. It doesn't cost you a penny to be flat. If it's really going to break, your trigger lines will tell the story. Number 2 here, the small triggers have absolutely smashed through the area. The large triggers have remained above. Because of the momentum, 50% of the triggers are through the area, 50% are not. This area does have the potential to break, but it's only the potential. This is the second trade. The second trade on the plan that I give you. That potential to break, if you find entry rules met, must be managed assertively because it is only potential. When 4 trigger lines, all 4 trigger lines, break through that area, sorry YouTubers, get below Fibonacci support, yellow 1-to-1s, divergence low. When all 4 lines break, the area is considered broken. The path is now clear, and your path remains clear until you reach the next line. And once you reach the next line, you go right back to number 1. So I made this pretty easy sheet for you. And you know what? I'm going to give you guys the PowerPoint right now so I don't forget. So you have all these pictures that I'm using to teach the room. If price reaches a line and none of the triggers break, the 0 is red, no trades. Rule number 2 is not met. If you are following the KISS plan, you are not allowed to take a trade. If 2 triggers break through the area with momentum, it does have the potential to break, but I want you all to notice the number 2 is still red. This is not your best look. The breakout becomes more imminent when 3 of the 4 trigger lines make it through the area. Now it's more likely to break than it is to reverse. This is your look based on the plan that I gave you, where you can start looking for that trend trade, that medium probability trend trade. But once all 4 trigger lines get through an area, guys, that area is broken. It's in the rear view mirror. Resistance becomes support, support becomes resistance. It is no longer a worry. We're looking forward with all that momentum. Does that make sense, everybody? How we doing so far? That's the S&P. Price trending down, hits Fibonacci support with weak triggers. Look at the giant kablooey. Price comes down, momentum breaks it, but with weak triggers. It heads the other direction, and we are in a weak trigger situation right now. It doesn't have to be difficult. Count triggers when you reach lines. Cool. And there's your NASDAQ. Look at that. Line to line to line to line. Rule number 2, keeping you guys out of a lot of heartache and pain. Rule number 2, saying, you think it's going up, but it's not. You're in the middle of a giant fight that rule number 2 is telling you, and you're in the middle of a giant fight that you don't have to be a part of. Sometimes, most of the time, areas may be stacked. You may be caught in a range. You just can't seem to find that clear path. Guys, this is 90% of your day. And 90% of your day is doing nothing. 90% of your day is sitting on your hands. 90% of your day is playing solitaire off to the side. The futures markets trade on average about $220 billion a day, or hourly, excuse me. The S&P, which most of you trade, exchanges about $174 million daily. It takes $400 a day consistently to put you in a six-figure income. That's it. $400 a day to put you in a six-figure income. Good morning, Miss Trina. Nice to have you. So there will be times where you can't find a trade. You don't have to be the first one in. You don't have to be the last one out. Guys, we're going to give you the keys to the kingdom, the magic beans, the golden goose, whatever you want to call it. You will have the best plan to take the easiest trades. The easiest trades have momentum and a clear path and a pullback to an area inside of triggers. Guys, we're going to pinpoint where these tails are likely to come from. Good afternoon, Miss Jen. Every day you hear me say you have to wait 90% of the day. One day it'll sink in. Every day's different, right, Jen? Some days you're so good at it that you talk yourself out of trades. And some days you just want to be in the market. And the more you focus around advantages, you can even pull off the impatience a little bit. But that's the first two rules. These are the two that should be your non-negotiable as a brand new user. Have the advantage of momentum. It's so hard to stop. Make sure there's nothing in the way, nothing to create a bounce. And when you have these two, the magic of rule number 3 is pretty outstanding. Use a limit order at areas and triggers. I don't like that phrase, but I like the picture, so I keep it. Here's your language, guys. You're going to use a limit order, which means you will literally wait for the market to come to you. And you will buy or sell a pullback. That pullback is the small fight. It's that little push by the small crowd when everything over here says up. And you're going to buy or sell that pullback at an area, at a fib, at a midband, at a yellow 1-to-1. Why? Because areas are bouncy. I know it sounds silly, right? This guy's teaching technical analysis and he uses words like bouncy because we all relate to bouncy. We know what that means. But that area, that bouncy thing, has to be inside of the triggers, the large triggers. It's going to show you where those areas need to be. It's like a map. X marks the spot. And your entry pattern is just that. It's a pattern. It'll look the same every high probability trend trade you take. And it begins with large chart rules met. So it's imperative that your large chart says up, that your large chart has strong triggers, and that your large chart has nothing in the way to create a bounce. Guys, this is the large crowd saying we want it to go up and we really don't want anyone to stop us. Enter the small crowd. The reversal bar on your small chart. Now I'm going to let you in on a secret. They're going without me. I can't believe I'm not getting paid. Mark Novak's a jerk. Nexgen stinks. What is this nonsense? Oh, look, they're going down. Happens every time. Reversal bar begins the pullback. It's not your entry. Just a little loss of momentum when the small crowd fights. You will pinpoint exactly where that retracement is likely to go. Somewhere from the bottom of those large triggers to the top of those large triggers. That's your retracement zone. It's not your entry. Trigger lines aren't bouncy. Areas are bouncy. And your areas must be somewhere below the top of the triggers and somewhere above the bottom of the triggers. Wherever it went, long or short, doesn't matter. This is your retracement zone. This is where the fight's most likely to go. Areas inside are where it's most likely to bounce. So you can say without hesitation, with a little study, that mid-band inside of triggers may be where the market is most likely to continue with the trend. Those 1-to-1s may be as well. I'm not sure. Creates a window. But because of momentum, because of clear path, your job will be to activate a limit order just above the highest point of support inside of triggers, and this becomes the highest probability trend trade ever. This is your entry that reduces risk. This is your entry that maximizes profit potential. And when you learn this very simple phrase, I am going to buy a pullback at an area inside of triggers, you have literally described where the market is most likely to bounce and continue with the large chart advantages. Any lines, any fibs, any mid bands, any yellow 1-to-1s beyond the retracement zone. This is the wrong side of the triggers. Once you get beyond these triggers, you don't know if, when, or where the market's going to go up. This is where the market should not go. This is actually where initial stops will be placed according to the plan. In a downtrend, the momentum is strong. The path is clear. I can't harp on these large chart rules enough to give you that advantage. When the reversal bar prints, you're going to say to yourself, the fight is on. This is exciting. Here they come. Where are they most likely to go? Somewhere from the bottom to the top of those triggers. That's your retracement zone. Where are they most likely to bounce and continue with the large chart? At that area inside of triggers, guys. A magical moment. One line inside of triggers. And sure enough, the market bounces, and sure enough, it continues, and you were waiting for it with a limit order. Any line beyond the triggers is not where entries come from according to the KISS plan. That is actually where the market should not go. Now let's go see if we can find some magic here. That's the NASDAQ. I don't want to do it on the NASDAQ. The NASDAQ is crazy fast. Let's do it on the S&P. You guys remember those tails that we talked about? With momentum, with the potential to break, these tails sprout on a large chart. It's pretty outstanding. Let me show you something even more outstanding. And this is this morning's S&P. If you scroll back on your small chart, that first tail was a pullback to an area inside of triggers. The next tail was a pullback to an area inside of triggers. The next tail was a pullback to an area inside of triggers. And we back it up because we love to make money both directions, eat from both sides of the buffet. That tail was a pullback to an area inside of triggers. Guys, this is the S&P this morning. This isn't me taking pictures and hoping you fall for it. That is literally what the market is giving you today. So we're going to learn the pattern, because the pattern is what lets you see the rest of the patterns. If I have momentum, if the path is clear or at least has the potential to break, I don't buy a tail because I don't know where the tail is going to form. I go to a smaller, faster chart, and I wait at the area inside of triggers with a limit order. And guys, on day one, I say this like it's the easiest thing ever. If you're here day one, you know who you are. Excuse me, I'm so sorry. This is what I felt like on day one. And guys, I've been on day one. There's a lot coming at you. There really is. I know there is. But if you learn momentum, and then you learn terminations, and then you learn entry, you can take that overwhelming piece out of it. This is a pattern. This happened on the 6th of November this year. Potential to break, all the momentum pull back to an area. This happened in 2021. Potential to break, all the momentum pull back to an area inside of triggers. 2022, same thing. And guys, if you go through that spreadsheet that I gave you, go through these client trades, you can click on links and say things like, oh my gosh, there's all that momentum with the potential to break, and it pulled right back to an area inside of triggers. The same checklist that Mark gave me this morning is the same checklist from, when was this? 2023. Pretty cool, right? Let's look at another one. We'll go all the way up to the top of the list. Momentum, potential to break, pull back to an area. Let's look at another one. Perfect trend trade long. Son of a gun. Momentum, potential to break, pull back to an area. Hold it, Mark. Isn't that the same picture? You would think so, but they're different markets, different times. It's just the exact same look. So Guys, that's your high probability trend trade. That's your Ninja Trader lesson this morning. Are there any questions? And I'm going to say it again, guys. You're not expected to know this on the first day. How could you? Don't put that pressure on yourself. Take this spreadsheet, and from this spreadsheet, start going through those pictures. Because if you click on pictures of strong triggers, let me show you exactly what you're going to see. You're not just going to see a picture of strong triggers. It is literally going to describe why they are strong. I want you to latch onto this, that when you annotate, when you take the time to write out the whys, it creates this correlation between what your eyes see and what your brain thinks. And your chart reads, you will find, will happen in a fraction of a second, guys. You'll get to this point to where you say, you know what? If I don't see my rules in 2 to 3 seconds, my rules aren't met. That's the NASDAQ right now. That was all the momentum. That was a clear path. Did they give an entry? Well, not quite. They missed out. And then once they got to the wrong side of the triggers, I don't know if, when, or where the market's going to go up. Pretty cool, right? Even with momentum and clear path. Entry rule number 3 keeps you out of the loser. I love that stuff. All right, let's do trading view. Sorry. Trading view only has 3 rules. 3 rules. Couldn't be true, right? Oh my gosh, 2 charts. 3 rules and 2 charts. Guys, simplicity. Have I mentioned that? Excuse me 1 second. Your large chart on TradingView is a 15-minute chart. That's a lot of time. That's a big slow chart, guys. We're going to use it to find direction, momentum, key targets, and terminations the same way we would. Large crowd. They're going to tell us what's happening, where it's most likely to be happening. 1-minute chart is a slower, faster chart. It's a smaller time frame. It's going to define the immediate strength in the market. It's going to define your entry points. It's going to show you where the pullback is most likely to go so that you can buy or sell a pullback in an area. On your large chart, there are no background colors. There are no large triggers. Your large chart is going to have small triggers only, guys. And when they're cyan, they're up. When they're white, they're down. Guys, they could be pink and polka dot. It doesn't matter. They're either up or they're down. Your small chart will have 2 sets of triggers. They will have both the small and the large so that we can define odds favorable momentum for the second trade on the plan that I'm going to give you, called a momentum trade. And those small triggers will define the immediate strength of the market. This is what you're going to learn to not fight to put you into the best trend trade ever. There's also areas. Horizontal lines that can be bouncy. Sorry, almost forgot to get technical on it. They have names. They're the same names. Divergence highs and lows, 1-to-1s, mid bands. You will see these outer bands. That's not normal if you're used to NinjaTrader. These are just areas of exhaustion. They're used as targets and terminations. I always encourage people, if you are on TradingView and you're brand new to it, steal this picture and look it over, because it tells you exactly what the areas can be used for, whether it's targets only, targets, terminations, or whether they can be used for entry. It'll take the guesswork out. And now we're going to talk about a trend trade, and we're going to use triggers and areas to define the highest trade probability trade you could take. First, you have to define the trend. I know it seems silly, but you can't take a trend trade if you're not following the trend. It's impossible. Your first rule is 100% dedicated to the idea that areas are bouncy, and it tells you don't trade directly into them. Um, Someone asked me once, Mark, what's the difference between trading into an area and trading to an area? Well, if you start a walk 6 inches from a wall, you just walked into the wall. If you start a walk 8 feet from the wall, you're walking to the wall. You had room to the wall. So guys, don't walk directly into an area. 1 minute says don't trade directly into areas. So clear path on 2 different charts is the first 2 rules for the trend trade. The final rule is just entry. You're going to buy or sell a pullback in an area on that 1 minute chart, that faster chart. You're going to do it. Zones, one-to-ones, or mid-bands because horizontal lines are bouncy. And you're going to do it with a close on the weak side of the small triggers. We're going to let the small triggers on the small chart tell us when it's time to go. We're not just going to buy or sell an area. So it all starts with trend. Trend is your friend. You've all heard that. If the small triggers on your 15-minute chart are pointing up, the trend is up. You're only looking for rules to be met for long trades. If the small triggers on the large chart are pointing down, the trend is down. You're only looking for rules to be met for short trades. Now this is a plan that is designed to optimize your chances of success. This is not the only way to use the software. I can't stress that enough, guys. I teach the foundation, the basics. That's not the only way to use the software. This is the highest probability way to use the software. Once you define direction, rule number 1 says don't trade into areas, which means you have to look at the price, you have to look at the bar, and you got to say to yourself, do I have room to get to trouble? And if there is space to get to trouble, you have room. And if it is trading directly into trouble, you don't. That's rule number 1. Rule number 2 is the same thing. When I enter the market, am I entering directly into a wall of trouble? And if you're not, rule number 2 is met. Just don't trade into things. I know it sounds silly, right? The triggers are up. From where the market is trading, I've got room to resistance. Do you guys see it? How easy is that? What is your range setting for NQ1 on the large chart? It's a 15-minute chart, Justin. That's it. I don't have a range setting. It's a 15-minute chart. I don't even know what a range setting is. Oh my gosh, I don't know. I just use the pre-made. So check it out. You don't have to worry about all that stuff. I don't know. There's my workspace, the same one from the user guide, the same one from the plan that I give. I mean, you're welcome to go through and look at it, but John Novak did all that smart stuff for me. Justin, I am right-brained. I'm the guy that simplifies. That's inputs, visibility. I don't know. I'm sure that there's some lessons in there, but those are your T3 indicators. I don't know that John's going to give all the secrets away. If you need those definitive answers, though, I would set up a ticket with tech and see if Jason has them for you. Sorry, I know that's not very helpful, but I don't even think about things like that. I think about trend, and I think about space, and then I just define great entries. And it's easier that way. So guys, once you have the trend defined, once there's room to trouble on both charts, this is what your entry is going to look like, whether it's a long or a short entry. This happens to be a long entry, but if everything was down, remember when I said that the market goes down and then there's a fight and then it continues down, or it continues down and there's a fight, or it goes up and there's a fight and then it continues up? That fight is a pullback to an area. So when everything says up, The moment these small triggers on the 1 minute chart turn down, your job is to look lower, to look for mid bands or zones or one-to-ones and say, hey, this is where my trend trade is probably going to originate. That's the best of the best spot. It's a 1 minute chart, guys. It may take 7, 8, 9, 10 minutes to get there. When it gets there, we don't just jump in because these 1 minute small triggers are strong. They're feisty. And you're going to wait for a close on the correct side of the triggers. And the correct side of the triggers for a long trade is 2 corners of an up bar above the small triggers. And the correct side of the triggers for a short trade is 2 corners of a down bar below the triggers. So if the market is trending up, here's your fight to the area, and that little close above puts us back in line with the underlying trend. It's literally the reversal on the 1 minute chart. Comes from the weak side of triggers. So your trend trade, just like on NinjaTrader, will look the same every time. If the small triggers are up, I'm looking to go up with it. If I have room to trouble, my rules are met on the large chart. Now it's time to go to the small chart. My small chart's all the way up here, and you're like, I don't have any room to trouble. I'm literally at trouble. This is where you have to remember the phrase. We're going to buy a pullback. We're going to hope trouble creates a bounce. And the moment the small triggers roll against you, you can set your eyes lower. You can look for mid bands, one-to-one zones. And when the market gets there, your entry is an up bar that closes on the correct side of the triggers. This is where the small chart is most likely to reverse to go in the direction of the large chart. And it's going to look the same every time. First, it's down. There has to be room. Small triggers roll up from trouble typically. There's your area. There's your down bar. There's your close on the correct side. The small chart has reversed into the direction of the large chart advantages. Are there any questions? Guys, that's your trend trade. I wish there were more rules to make it more complicated for you, but there's really not. The triggers are up. There is zero space to trouble. There's nothing to do. That's how quick the read is. Triggers are up, directly into trouble. I don't care what my small chart says. I don't have my rules met. Management is huge. Management's is where money is made. Your management on TradingView starts before you ever get off the large chart and look for an entry. You'll know exactly how you're going to manage that trade before you ever pull the trigger. When the small triggers are up, when there's room to targets, you're going to make a comparison. You're going to take the most current price and you're going to compare it. Where is it in relationship to those small triggers that are up? And there's only 3 options. It's either left of the triggers, it's right of the triggers, or it's inside of the triggers. That's it. If you are kind of left and inside, you're inside. And if you're kind of right and inside, you're inside. But if you're left of the triggers, this is the strong side of the triggers. This is where markets are hard to stop. This is where bigger moves come from. This is where 1-minute errors are most likely to break. This is where management is going to be the loosest. And let me show you, why do we wait for the other side? Because we don't fight strong triggers, not even on a small chart. If you're right of the triggers, you're on the weak side. And the weak side is where reversals come from, which is why on the trend trade, entries come from the weak side of the triggers. For a management standpoint, this is where 1-minute areas are most likely to create bounces. This is where quicker profits are typically taken. This is where not exposing yourself, hoping for bigger moves, because reversals do come from the weak side of triggers. Now, if you're in transition, if you're number 2 here, inside of the triggers, you're not really strong or weak. And let me show you guys, 15-minute bar. It can go from weak to transition all the way to strong before it hits trouble. When you're in transition, this is where partial profits make sense. This is where if I choose to take this long trade, I might get paid halfway up at trouble, go to break even, protect my investment, but I'm willing to let that next one ride to look for the bigger trade. And guys, that is trading view. Look at that, the NASDAQ right off of Fibonacci resistance to the freaking tick. If you're not impressed with Fibonacci, you're not paying attention. This is crude oil. Termination. Look at Fibonacci support bouncing. My most current bar has momentum, but it has reached a line and my triggers haven't broken. I have a termination condition, guys. Rules 1 and 2 aren't quite met, which means that I'm in this state where I'm like, you know, it might break. It could break. I mean, not really even showing the potential to break. If you take a pullback to an area inside of triggers, directly into this Fibonacci area with no triggers through it, guys, you're not allowed to be surprised if you lose that trade. This is like a brick wall. This is an area that could stop the market. And that's what your read's going to be. I have momentum. I don't have a clear path. I choose not to trade. I don't have momentum. I am missing my fibs. Watch this. Let's get those fibs back on. I don't have a clear path. I choose not to trade. Well, Mark, how do you make money if you keep choosing not to trade? Mark, how do I trade the markets if you keep telling me I can't take trades? And I get that, guys, and I get angry letters all the time. These rules are based off of thousands of pictures. I would say tens of thousands of pictures now in the 30 years Nexgen's been teaching people. My own library is, I don't know, just under 20,000 pictures deep, guys. And the one thing that I say without hesitation is that the market's been doing the same thing for as long as I've been doing this. It's been going up. It's been going down. It's had momentum and path. It pulls back to areas, guys. This is your foundation. I want you to learn to speak in terms of advantages. I want you to look at your chart, and I want you to say, my perfect trade is momentum, clear path, and entry. That's the best of the best. That's the one as a brand new user that built this amazing foundation that I grew from. But that's not the only trade, guys. I'm not here to stifle you. When you start reading your charts in terms of advantages, you say to yourself, all my indicators on every chart agree with the rules for the trade. That's a high probability scenario. Most of your trades will be medium probability. Medium probability means that most of your indicators line up for a trade. However, an issue exists. It may be that the momentum isn't the best. You're going to see one posted from this morning where the path wasn't clear, but the momentum and entry were. And you're going to say to yourself, wow, this is medium probability, not high probability. That's going to put my management hat on. That's going to allow me to manage assertively, to get to break even, to take quick profits. Haven't gone, yeah, I've already gone through the TV class, Wayne. I have. And you'll also be able to look at your charts and say to yourself, I'm missing 2 out of 3. There's the PowerPoint. Excuse me. And if you really need just that TV class, Wayne, guys, this is my first hour. This is my first hour every hour. There's the rules. But knowing what you're up against, guys, knowing what's working for you, what's working against you, that's what's going to let you know how you need to react, how you need to manage, whether or not you want to be in that trade. And just a heads up, and we're about to get into the second half of class. The second half of class is feedback, where we look at your charts, I read what you said, and we talk about it. And Wayne's going to get us going. Wayne's got to go build hot rods, so we're going to look at his charts. So the triggers were down when he got in, he said. The bar was on the strong side of down. The market pulled back to resistance. When it closes below the H big bar, you get in at resistance at 40 and out at trouble. So Wayne doesn't follow the trend trade rules. Wayne takes what's called momentum trades typically. And this one doesn't have momentum. It's fighting me up. But this is that growth piece where Wayne says, I don't have any more long trades into a termination. I've got a wall of resistance. I'm going to go short down to trouble. It's nicely done, Wayne. And then the momentum trades. The trend is up. Strong side of the triggers. Wayne lets price break above trouble and pull back. This is the momentum trade. This is the second trade in your plan. And Wayne, 40 tick profit. Beautiful. What a great trade. It's a $400 trade, probably in a matter of seconds, or at least a minute and a half. Nicely done. Momentum trade, rules met, one trade, goal met, done for the night. $1,200 night. Nice job, Wayne. And now this is pretty cool. So Wayne says it's up, it's strong side, life is good. I'm going to get in above trouble. I'm going to get out at trouble because a small chart is pushing with momentum as well. And Wayne says everything is up. I'm on the strong side. I'm going to get in at trouble with momentum, and I'm going to get out at trouble because momentum pushes a market. Guys, I don't teach this trade. This is Wayne's version of it. It's pretty solid. And then Wayne says, more of the same. I'm going to get in at trouble. I'm going to get out at trouble. But now those small triggers are turning down. He's losing momentum. And this is what we see. Tried it 2 more times on the way up from the zone, but a momentum trade without momentum doesn't work most of the time. And guys, it's this self-analysis right here where you go back, where you look at your trade, where you ask what went wrong. That's what he said. My momentum is gone. This trade was better, but should have entered on this bar because it opened above the white bar, pulled back 3 ticks above the zone, ride it up to the next zone, and got lucky that it worked. So Wayne is a momentum style trader. Wayne relies on momentum to push the market. With momentum, with momentum, with momentum. One counter trend trade using the termination, really nicely done. And guys, this is the going back and looking at what you did, finding your thing. Strong side, momentum, strong side, zone to zone, beautiful. Look at his 2 losers. 2 momentum trades with no momentum. Telling you, you guys will make mistakes. You will get caught up in the moment. Even someone that trades as well as Wayne got so excited about momentum trades, he forgot to look for momentum. This little self-reflection, that $900 hickey, you guarantee Wayne is going to look for momentum next time he goes after these trades. Nicely done, Wayne. Not a lot of need for feedback on that one. Your plan is so solid. And you either have momentum or don't. You're either strong side or you're not. You've either got room or you don't. And Wayne really does adhere to that. If my rules are met, I take the trade. If they're not, learning how to sit still. And sitting still is the hardest thing you'll ever do. All right, guys, that's my first hour. So Texas, I'm from Texas too, so I'm not supposed to play favorites, but you're one of my favorites. Daniel 3, Danny, Marika. Guys, this is the exact same hour that I had yesterday, that I'll have tomorrow, that's in that video that I just posted. We go through the foundation every day, and then we get into chart reads. And as we get into chart reads, you don't have to take every trade, just take the best. Amen. Add contracts, right? I'm going to show you guys. This is an email response to a gentleman or a lady, I won't suggest who, was mad, excuse me, coming into the second hour, because people were posting trades that weren't high probability trend trades. And they're like, well, they're breaking the rules. And I had to say, egads, little fishes, who made you the trade police? We're not the trade police, guys. That's not our job. The key to everything that we do with Nexgen, and guys, we've been doing this for nearly 30 years. Understand the basics and then grow a little bit from those basics. So for you brand new users, when I hand you a KISS plan, a Keep It Simple Sunshine plan, it's very conservative rules. It's the recognition of advantages, the focus, not the money. And it's a very solid plan that optimizes your chances of success as you learn to read your indicators. So for all you new users, terminations, no momentum, areas beyond triggers, jumping in before the close on the correct side, all of that stuff is horrible because the average new user is more likely to lose than win. These are blanket rules because those rules increase the likelihood of success. Confidence comes from the memory of success. They're not always bad, but until you have the ability and the knowledge and the reps to know when to use exceptions, guys, it's just safer that way for you. Just like anything, the more time you spend with it, the more you'll see it opens doors. The slower the market gets, the higher the confidence level, the more you can do. When I was in my 20s, oh my gosh, I moved to Colorado with the intent of learning to snowboard. And I used to sit at the top of the hill terrified as I buckled bindings ready to go. By the end of the season, guys, I was halfway down the hill before the second binding was buckled. It's the experience that makes it easy. So don't be in such a hurry to be at the finish line. Build your experience. You've got to learn the process that yields results, guys. Trading is a process. Trading is repetition. Trading is the same thing. Trading is one pattern that you can prove wins more than it loses. The results follow the process. That's where the KISS plan comes in. If you keep it basic, follow simple rules, be okay not looking for all the trades, only the best trades, I think Wayne just said that, you can find an extraordinary level of success, and I've watched it repeatedly over the years. The further new users deviate from simple, and we've all been there, most of you in this room will follow the KISS plan like your life depends on it. In about 30 days, you'll be too smart for the KISS plan, and you're going to start taking losers and second guess everything you ever knew. I call it the 30-day stupid. It's a real phenomenon. Question everything. Learn the simple patterns and understand that there is this great big world out there that you can explore, where you can find more trades. But my brother says this, and I think this is probably one of the smartest things you could ever say in regards to trading. If you can't make money the easy way, how are you going to make it the hard way? If you can't make money with 3 rules on 2 charts, how are you going to know when it's time to go counter trend? How are you going to know when it's time to fight triggers? How are you going to know when it's okay to take a chance in determination conditions? Because I guarantee someone in this room said with all that momentum, that blue line has to break. It didn't, did it? And now I have momentum and I have room to trouble. And you know what? If they pulled back to an area inside of triggers, I could justify a trade unless they hit the red line first. That's how quickly you'll know whether or not your rules are met. Do you guys see it? Separation between the small and large. Price has not reached Fibonacci resistance. If I get a reversal bar, those yellow 1-to-1s are right at the top of my triggers. Guys, this is the pattern that we talk about every day. This is what it looks like before the reversal bar even happens. You will call your shots if you take the time to learn those 3 concepts. All right, I'm going to walk away for a minute, guys. Give me about 5 minutes. When I come back, we'll go through the charts that are posted. We will continue to read the live market. If the rules are met per the KISS plan, whether it is TradingView, whether it is NinjaTrader, we'll take some live trades. We'll do some management, but they will be for an educational purpose. So I'll be back in just a couple minutes, guys. Go stretch your legs. I'll see you in 5. Here we go, second half. All right. Let me click on what's been presented, guys. I'm going to go through all of them here. And remember, I have no desire to be the trade police to tell you that you're a good person or a bad person. Your trading has nothing to do with that. We're just going to talk chart reads, guys. We're going to see what was done, what was not done. Man, I'll tell you what, Z-Robot, you think a lot. I love it. Here we go. 15-minute long triggers, transition, clear path. There's a pullback to a midband. There's a close above. And there's profits. Very nicely done, Paul. And then when it doesn't go because it's in transition, you don't give it back. Great job. Awesome, awesome trade. You had the direction, you had room, but because it was transition, you knew that if this area didn't just arbitrarily go, it may not. Great, great management. Nicely done. Medium probability trend trade. Market reversed out of nowhere. Triggers rolled up, separated, 3 triggers through. And I posted this in the room, guys, because this is a really good lesson for you guys. See how many times I can say guys in one breath. Pete's saying, man, 3 triggers got through. Heck yeah, the potential is there. Life is good. This thing could break. But price reached the next line. Price made it to Fibonacci resistance. You can even see it on the small chart. Pete still takes the pullback because he has all of the momentum and he gets paid at treble. And I want to show you why this trade is so important for new users. If you're a brand new user, this is not your trade. If you're following the KISS plan, this is not your trade. The KISS plan is very, very clear that in order to take a high probability trend trade, you must have momentum, path, and entry. That's the key. That's the recipe. That's the golden goose. Now, what I tell you guys every morning is that when you know what you're up against, you're going to know if you need to manage assertively. You still may find opportunity, but you'll lean on the other 2 advantages. So Pete says, man, I've got the best momentum ever, separation between the small and the large. I love that. That's going to be hard to stop. Pete also knows I don't have a clear path. I've got a brick wall of a fib right in front of me. And Pete says, but you know what? That's about the lowest risk entry. Damn near bought the low tick because my entry rules are freaking amazing. And with all of that momentum, Pete said, and I don't have a Pete voice today, Pete said, I choose to trade directly into a termination and manage my trade assertively. Does that make sense, guys? That's your right. Now I'm going to show you the second half of that. Termination conditions are a thing. They came to be because more often than not, even with momentum, you're more likely to get the shit kicked out of you than you are not. Pardon my French. Termination condition rules are termination condition rules because more often than not, if you trade directly into a termination, no matter what the momentum is, you are more likely to lose that trade than you are to win. It takes away your edge. And guys, that's the perfect example right there. The easiest trade you'll ever take will trade to termination conditions, not into termination conditions. But you will get to a point in your trading where you make the choice if you want to take it. I know the term was your target because it's a term. It's a good target. But Pete understands the market didn't have to go back up to that termination. It had already been there. They had already reached it. They had already reacted. And he ran the risk of this, right? But let me go one step further because I don't want to feel like I'm beating up Pete. Pete said, if this stuff doesn't hold, I'll take a little hickey. I'm cool with that. It's only 2 contracts. My plan is good. Take and manage. Take and manage. All right, Victor. Trend trade. The triggers are up. You're in the transition side of the triggers. You have $200 worth of space to the next area. The market pulls back and closes above, and it goes to trouble. So, Victor, there is a lesson in here. And guys, this is a trading view lesson only. Are you with me, Victor? I'm going to share one picture with you guys. When we're talking about areas on TradingView, it has nothing to do with triggers. If I reach Fibonacci, or if I reach resistance, resistance remains resistance until I get the full body of a bar that closes above. And then resistance becomes support, Exhibit A. And it remains support for the duration of its life until there's a full body below, at which point it becomes resistance again. Does that make sense? So, Victor, when we look at your trade, your support became resistance. You traded not from an area, but from a little peak above an area of resistance. And look what the market did. Huge retracement because it's still behaving as resistance. So rule number 2 is technically not met. Does that make sense, Victor? And again, I'm not telling you it's not your trade, right? I'm not telling you not to take it, but did you realize that this was not support? And you can see the reaction from it. And thank goodness it didn't just continue down. And it does go up. So take and manage. Great stop placement, good management. But guys, this is a big lesson. I didn't mention an entry point, Victor. I just didn't. Did not mention an entry point. Because I have to go back to the very basic, highest probability trend trade rules. And rule number 2 wasn't met. And I'm not saying that there wasn't a trade there. But there's not the best trend trade. Absolutely, Jen. And watch this. Looks like they're going to give us a pretty good example right here. This area of support, or resistance, I'm so sorry. Price comes up and hits resistance. Does everybody see it? We'll do the whole picture here. I love lessons like this. Boom, 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 boom. So this is an area of resistance. As price is coming up to it, we've reached an area of resistance. So Jen, when you get a full bar body that closes above it, let's use lettering here. This area of resistance, once that full body breaks above, it becomes support. That's the recipe for support and resistance. Whoops. On TradingView. And look at this. Look how supporty it is right here. And it stays support. And then it goes back to resistance. And it breaks above, right? So now this was resistance, Jen. The same as it was right here. And then once it breaks above, it becomes support. Do you see it? So first it's resistance, break above, behaves as support. Still resistance. Once it breaks above, it becomes support. Now, why is that important? Well, look at this. support, 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 support. It never gets a bar below. So if you were like, oh, I'm going to go short, this has to break, look at the momentum, it's peaking its head, you're trading directly into support. In this area up here that is behaving as resistance, both of them really, now you've got like two areas, and that's where the market comes back to. So the idea on TradingView, support held, and it's right back into resistance. You'll see it a lot. Area of support. Market pulls back to it. It's still support, right? And look at that. It blows all the way back up. So tail has nothing to do with it, Trina. It's a full body close. So for you newer TradingView people, excuse me, this look right here, where you say, oh, cool, support broke, that's the prairie dog, guys. And the prairie dog creates a lot of losses for new people. The prairie dog really screws up your good time. It looks like it's broken, but it never gets the full body, and it goes back up. And it looks like it's broken, but it never gets the full body, and it goes back down. So one of the things that I do is I identify patterns not only in the market, but also in you guys and the things that you do. And that is one of the biggest creators of losers. And guys, until I get a full bar, body of a bar broken above this area, this is nothing but trouble. Do you guys see it? It's resistance here. It's resistance here. And if this bar peaks its head, it doesn't break it. Jen, does that help? That's a good lesson for TradingView, guys. So that's one of those lessons that really kind of takes you next level. And then Trina, can I address the tails? Let me see if I can find a good example on tails. So you'll see tails, especially on a 15-minute. What does the tail mean? The tail means that they tried and failed. That they tried and failed. And over here, they tried and failed. So when you see a tail, and there's a great example here, 1, 2, 3, 4, 5, 6, 7, 8 times they tried to push that price below support, Trina, and 8 times they failed. That's what the tails are. The tails are literally a try and a fail. Try, fail. Pretty cool, right? Try, fail. Egads and little fishes. So you start thinking of it like that. You're like, man, these jerks couldn't get below there 8 times. Why am I so hell-bent on trading into that area? And where are we now? Now it's up. We're in transition. We just need to get above the area, right? There's room to 06. We need a little break and a little pullback and a little close on the correct side of the triggers, and we're off to the races. It's just a matter of patience at this point. So all that to be said, Victor, rule number 2 wasn't met. I hope that makes sense. And I'm not calling you a horrible person. I'm just saying that could have just as easily been in trouble. Actually, you know what? Nope, Victor. Sorry, guys. I'm day late and dollar short. Full bar. See the body? Broke above. It's support again, Victor. That's your entry from support. That would have been the one that I should have pointed out. I just couldn't see it well enough. See how the body of the bar broke above? Support, resistance, support, close above from support. Does that make sense? It's a little bit later, but you don't sit through the headache. Does that make sense, Jen? New to the lesson? Good stuff, Victor. All right. Now it's 3 triggers through. All the momentum. You're welcome, Miss Jen. Can't take a momentum trade without momentum. And it failed pretty quick. But then it comes back and turns into a trend trade. And quick profits. Didn't mean to sell here, still made 225. Break even on these too. So commissions. We learned this lesson this morning, guys. If you're going to jump in on a momentum style trade, at least have momentum. If there's no separation between the small and large, it's more likely to create that retracement back and turn into the trend trade. Pete caught it awesome. All right, entry was made, went long into trouble from the weak side of triggers. It didn't work out, did it, Paul? You're welcome, Paul. So large chart says nowhere to go. Small chart says pulling back to support. You get in with the close above. You broke rule number 1, but you're going on number 2. Is the TV trigger the same as it's the 8-3 triggers, Gene? Yeah, they're just small triggers. There's your entry. So this would be stop placement, right? Paul, where does your stop go in a trend trade? It goes where the market shouldn't. It goes where the sellers failed and the buyers took over. And that little V is your stop. And that little V keeps you in the trade, Paul, because support never became anything other than support. And there it goes off to the races, huh? So if you're going to break this rule, you've got to be prepared for these kind of shenanigans. And if you're really committed to the trade, these are rarely the ones that just run. These are the ones where you're literally in the middle of a fight. There's the fight. But the pivot was good. So it's a good thought. It's a good look. Could have taken the re-entry and gotten it. But guys, your trades will become more difficult when you break rules. I'm just going to say it. When you begin to forfeit advantages, your trades are probably not going to be those direct runners that you wish they would be. Triggers down, strong side, nothing in the way. There's your pullback to resistance. There's your close below. Did not like the look of the small triggers up. Man, hold on. Paul, I'm going to go tongue-in-cheek smartass real quick, okay? We have to add another rule to your checklist. These rules mean squat if I don't like a look of small triggers, right? Have you ever noticed, Paul, that it just says close below the small triggers? That's it. It doesn't say make sure that they're down, that they've rolled. It doesn't say form an opinion on anything. It just says if you pull back to resistance with this look, that's your entry. This is one of the things that as a brand new user, guys, you really want to latch onto. You want to latch onto the idea that either your rules are met or they're not. And especially on simulator, every time it fits your checklist, pull the trigger. You're on simulator. This is what you're learning. Drop it in the room and we'll have a great lesson on it, right? So Paul, you took the perfect trade and talked yourself out of it. 15 minutes not even coming from a spot. Like it's just zoom, baby. And that was from 36 down to 30. It's about a $250 trade that you talked yourself out of because you didn't like the way the triggers looked. And well, the other side of that, Paul, is you'll say things like, my rules aren't met. but I really like the look of the triggers, right? So you'll use that same logic to break rules that you do to talk yourself out of rules met trades. I've done it a million times. So what if, hypothetically, guys, you said as a brand new user, if I have this, I'll take the trade without question. If I don't have this, I'm going to sit on my hands. I'll take pictures. I'll drop those pictures. Hey, Mark, I'm not sure if this was actually a trade or not. What did you see? And we'll talk about it. Okay, Boaz, no separation, not momentum. It is a clear path. Small triggers are even down. No momentum here. And no areas inside of triggers, Boaz. That's the most important lesson here. No separation. That's not strength. No area inside of triggers. And then, guys, if you're new with me in here, I want you to see how easy trading can be. It's our opinions that whip our butts, guys. I'm not going to lie. If the perfect trade is momentum, clear path, and entry. Daniel 3, Texas, Danny, work with me here. Do you see that there is absolutely no separation between the small and large triggers on the large chart? This is where he took his trade, right here. Is it easy to see that there's no gap between the triggers for you guys? There is no momentum. I can never call that the advantage of momentum. Remember, we're talking about advantages. Price hasn't reached anything, it cleared trouble. We have a clear path. But that very simple phrase, pull back to an area inside of triggers. Here's the triggers. Whoops, that's a stop sign. It knows. There's my triggers, and there's no lines. No lines whatsoever inside. Which means, Boaz, you're giving up 2/3 of the things that make a great trade. Does that make sense? And without momentum to push it, and from this far below triggers, that reversal bar is probably not going to save you. And your stop was huge. Happened fast. Does that make sense, Boaz? This is kind of outside what you usually do. That's the it's Monday morning, I'm ready to make money look. Victor, trend trade up, strong side, plenty of room. Before this trade, I was on a trade by mistake. I left one of my profit targets on the chart. It got triggered, was a mess, got out with minimal damage. Pull back to the area, directly into resistance. 73 has you directly into a zone here. Worked out. Victor, you're trading into areas, and it's working for you today. You're not giving yourself any room to run, and for whatever reason today, they're telling you, Victor, we're going to let you get lucky. Triple dog dare you. Why don't you double up your contracts? Why don't you put your wife's college fund on the line? Trend trade base hit. Momentum, clear path, pull back to the area inside of triggers. Easy peasy. Nicely done. Great trade. Man, Z-Robot, if you want to do the cool zoom, bang it out over here. Show them how you sold the high tick at an area inside of triggers. That's what I'd be bragging about. Great job, dude. That's a good looking trade. I'm just kidding. Don't do the zooms. I know they're fun and they seem neat, but it's distracting. Market's cranking. There's nothing in the way. Market's cranking. There's nothing in the way. And you said, dude, I'll just jump in and see if I can make some money with the market screaming and nothing there to stop it. Guys, this is a jump the fudge in trade. JTFI. That's how you do it. Nothing in the way. Boom. I love it. I love it. When a market is screaming and there's nothing there to create a bounce, it's crazy how often it doesn't bounce. Nice trading, Z-Robot. Like a rock star. All right, Paul. Triggers up. Nowhere to go. Close above. Didn't trust it. Original stop. Pulled tight because it's into short, large triggers. I don't know that rule. Stopped out. The difference between minus 430 and plus 430, right? Guys, this is a great example. I broke my rules. Now, I'm going to talk about what that means. I took the perfect entry, but I broke my rules. I know where stops go, but I broke my rules. I know my targets, but I broke my rules. Better move that stop tight because I broke my rules. Shit. Sound about right? Has anyone other than me ever done that? I know I'm breaking my rules. I can't manage that trade effectively. All I think about is how I shouldn't have been trading into that red line, and it doesn't let me manage the trade emotionally. I know that that thing could create a bounce. I better move my stop. I know that thing could create a bounce. I better give these large triggers some weight that they don't deserve. I know that line can create a bounce. Ah, shit. It's better just to take the loser than it is to hope for the winner. And guys, that's a very real thing. And Paul, I'm not suggesting that I can tell you what you were thinking during a trade. But when you break your rules, you're more likely to mismanage a trade. When you say to yourself, I shouldn't have done that, trades feel forced. They make you nervous. And how can I manage the perfect trade using the perfect trade management plan if it is not, in fact, the perfect trade? Now I've got to come up with an emotional plan to manage a trade. And Paul, I get it. It's hard to keep your stop there when you see that. I get it. So there's only two options. Either you commit to it. Hell yeah, I broke the rules. What are you going to do about it? These triggers are up and I like this look. Or you just got to say, man, if I can't manage it effectively, maybe I should just hold off. Maybe I should just wait for the next opportunity. Good stuff, Paul. Good stuff. There's lessons in everything. Because I've broken all the rules. Paul, I've screwed up everything 100 different ways. You'll never reach my level of mistakes. Not in this lifetime. Jen, so Mark, this bar closed below full bar. That's resistance. But it's been resistance the whole time, right, Jen? Resistance, 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 resistance. This doesn't change that. So let's go back a level. Let's go back a level. Jen, resistance, 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 support. That's how that works, Jen. Right? Resistance, 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 resistance. But look, it pulled back to support that used to be resistance. And look what it did. It bounced. Yeah, a full bar below won't make it more resistance. It's still just resistance. You know what, Paul? You are where most people are. You're really good at reading the indicators. You know exactly what you're looking for. So much so that you're feeling pretty smart and taking trades outside of the plan. But you don't, but because you're so good at the plan, now you've got to work through your brain telling you to jump ship because you broke rules, because your brain trusts the plan. Your checkbook doesn't like waiting. Good question, Jen. Did that make sense? And is that the market there? It just stayed resistance, right? That's actually it, I think. Maybe it was the ES. It just stayed resistance. And that is still support. The same as it was over here when the bar broke above. It's pretty neat. It really is pretty neat. The same is true on NinjaTrader. When resistance breaks, it behaves as support. Here it didn't actually break. Here it didn't actually break. Here it's actually broken. And now if price pulls back to that fib is in fact support. See how far back that fib goes. Nope. That fib's been there for a couple days and it's been nothing but support. Here's a good example of that. Price breaks through. It didn't quite. Price breaks above resistance. Look how they come back and test it as support. You guys can see this over and over. It is unbelievably true. I just closed out the chart. So here's a trick for you guys. If you ever close a workspace, like exit out on accident, go to that workspace and close it, but don't save it. And then when you reopen it, it won't have your oops on there. It'll give you your chart back. All right, Papa. Momentum on the large chart. Room to trouble, so you're above trouble. Jumped in on the small chart. All right. So, Papa, what's the challenge here? If we had to pick a challenge, maybe $8 worth of profits before you hit trouble? So I'm not going to tell you what to do, Papa. Not my job. Okay, that resistance wasn't there at the time, so it was just up to the then I love it. Then good stuff. You had room to get to trouble. You had more room from here. More room from here. That's the one that made this support resistance. Man, if I'm just going to jump the fudge in, I like that big long root. Good job. If that zone wasn't there, and that happens without a doubt, where the zone was there and then suddenly it's not there. All right, Marika, I'm so excited to see your chart. All right, so let's go through it. Are you ready, Marika? Are you with me in here? Couple different things that I notice. Give me a Y if you're with me. Otherwise, okay, cool. So what direction is the market going? Because it's green, it's up. Cool. The easiest thing you'll ever do is go up with it. Now, Marika, do you recognize separation between the small and large? And that's rule number one met for a trend trade. That is strong triggers. That is momentum. Okay. So here, I'm going to write it out. Price reached resistance. No triggers through. That's a term. I'm trying to figure out what you did. Because I saw the sell stop and I thought you were trying to go short. Are you trying to go short? Or was that just your stop in place? There's your long. Okay, so that is a sell stop. That'll put you in a short position if that gets hit. You may want to cancel that out. So you got in right here. Is that right? It breaks above, pulls right back to the fib inside of triggers, and you said, let's go long, right up to trouble. Am I reading that right? So with momentum and room to trouble, you took a pullback to an area inside of triggers, and you got out at trouble. Marika, that's everything we teach. It was the potential to break, wasn't completely clear. Great job waiting for that fib, and it looks like you got paid at that fib, which is even better. Probably got in down here, took it up to the fib, let it break, re-entered. Nicely done, Marika. Do you have any questions about it? With that level of momentum and the potential to break, it's going to be difficult for that market not to go up. You latched onto it and you found a way to do it. Nicely done. But be careful leaving these in there. Is it hanging? Is it one of those hanging orders that you can't get rid of? Sometimes when they're orange, they are. If that ever happens to you guys, that's your fix. You have to go tools, database, and kind of reset things. Great job. Momentum, potential to break, pull back to the area inside of triggers, get paid. I mean, my goodness, you couldn't have done that any better. Partial profits and out of the one-to-ones. Love it. I told you it would get easier, didn't I, Marika? Right around day 3, and you would probably be calling trades by the 5th day. Whew. Thank you for not making a liar out of me. How do I? Okay, I'll show you. So right-click on your chart and go to Data Series. Scroll all the way to the bottom as far as it will let you. And you're going to right down here under Plot Executions, Text and Marker. And I'll get the full picture for you here. So right-click and go to Data Series, and then Execution, and then Text and Marker. And that'll show you everything you need to see. And let me know if you get lost on that. I'll be happy to help out. Great job. It's fun, guys, because on everybody's first day, I show this picture, and I always say, if you keep it simple, by the 3rd or 4th day, you're going to see these trades presenting themselves. And Marika, I believe today is day 4, maybe day 5. Great job. That's the stuff that lets me know that the way we teach this works. Potential to break. The KISS plan says don't do it with divergence, so I'm not allowed to pull the trigger. But if this market is going to continue up, that one line inside of triggers is where it's most likely to happen. Now, because it's only the potential, my KISS plan says don't take it with these divergences. But that's it. You guys see it? Momentum, potential. There's my area inside of triggers. Absolutely, Gene. Divergence is a loss of momentum. I'm relying on momentum to break this area. That's why your KISS plan says that one's less likely to win than it is to lose. We'll come back and look at it. Gene, I'm going to do 2 things for you, brother. I'm going to hand you a PowerPoint because I missed you at Christmas. And let's go through it. And you just want stop placement? Right on. The biggest difference, Gene, excuse me, the biggest difference is on TradingView. You don't get in at the area like you would on NinjaTrader. On TradingView, it's so important that you wait for the market to close on the correct side of triggers. That's the biggest difference, I think, between TradingView and NinjaTrader, is NinjaTrader gives you the ability to really call your shots right in a line. TradingView demands a little bit of patience. So let's talk about stop placement. And even more so, let's talk about the whys. So in this particular trade, it's imperative that you understand that the sellers are in control. When you're looking for a short trade, the sellers on the large chart have dictated that the market is going down. That's what they want to have happen, and that's the direction that we've chosen to go with it. Does that make sense, Gene? Everybody in the room? Our entry rules rely on the fight, right? I need buyers to show up. I need them to push the market up. I need them to get me to that key area where I'm going to enter the market. This is the fight, right? This isn't a trend reversal. This is the fight. Are you good with that? Gene, your entry is that down bar that finishes below, actually it's this one, that down bar that finishes below the small triggers. That's your entry logic. What is the entry logic? The entry logic is the sellers are in control. I want to hang out with them. The buyers fought. My rules say this is where they are most likely to lose. And that's kind of what the rules do. The rules say this area with a close below, that's where the buyers are most likely to lose. And if you get your signal, you're in. And once you get your signal and the sellers take back over and start to push it in the direction of the prevailing trend, your stop, Gene, your initial stop in a trend trade will go above the pivot where the buyers lose their fight. You'd be surprised. They're not typically as big as you would think. They're typically not as big as you would think. I thought the same thing. But on the S&P, I actually think a lot of times TradingView is less. Same with NASDAQ, to be honest with you. But that's the stop logic. So the sellers are in control. The buyers fight. We're just going to put our stop above where they lost, because if they fight again, I don't want to be there. Same is true here. The buyers are in control. The sellers fight. This is exactly where they lost. That's exactly where I enter. I'm going to put my stop below. That's your initial stop. Does that make sense? And then this is familiar from NinjaTrader, Gene. If I'm in a short trade and the buyers fight and fail, I can move my stop behind it. And if they fight again and fail, I can move my stop behind it. And if they fight again and fail, I'll move my stop behind it. So I will use the repetition of the buyers failing to continually put my stop in bigger moves behind their failure point, or where the sellers try and fail in a long trend trade. So I think that one of the easiest ways to do it, oh, look at that, they're bouncing, is to say, if I take this entry, right, market pulls back, if you got long, your stop goes below their failure point. Now this is into all sorts of trouble, which makes it a little more difficult trade. You would have to break some rules to take this trade. And look at the scramble. I don't want to be a part of that. I don't know if you want to be a part of that. Jen, in 13 seconds, we'll know if we get a full body above. This is the ES. No, that is the NASDAQ, isn't it? That's NASDAQ. That's NASDAQ. Are my charts messed up? They are. Nope, there we go. That's ES. But that's NASDAQ. Hold on. Sorry guys, I change my charts so much that every now and then I'll screw them up. Here we go, Jen. New zone showed up and now you're in the middle of it. That happens. There it is. Now we got to get above it, right? One of the great things, guys, is that if you really study the methodology, you'll call your shots. You'll know exactly where the market has to go. You'll know exactly where the market is likely to stop. You'll know right where it's most likely to continue. Hell, we drew a box right there. And that's exactly where it bounced. Right at the bottom of the retracement zone, right at the area inside. Now, for some of you, that's your trade. For me personally, it's not my trade. It doesn't fit my plan. Does it fit your plan? Because it's your plan that you're trading, guys. Avoid the temptation of trying to be like everybody else in the room. Everybody's at a different spot. Everybody's at a different level. Everybody sees things differently. You've got to do what speaks to you. This was my picture from last week. This is the people in the room with a lot of experience, with a plan that they've worked hard to perfect, to understand. This is new people trying to execute based on not having the experience. You'll get there. I mean, gosh, if you spend any time in this room, we'll work on it together until you get there. How do you load the supply-demand zones from chart prime and support resistance lines from flux charts? Do you own chart prime, Gene? That'll be my first question. Or do you lease it? Have you paid for it? I have a lot of people telling me that they can't get the zones. Okay, so Chart Prime you pay for. Chart Prime is $50 a month. My opinion, worth every penny. But if you don't have it, go to indicators. And I'll give you the picture here, Gene. This is Algo Alpha, Dynamic Supply and Demand Zones. That's a pretty good one. It's a little resource heavy. Not quite as accurate as Chart Prime, but pretty stinking good if you want something. And then if you want the support and resistance zones, that's them. Right there, it's Flux Chart. So you'll type those into your indicator search bar. Those are 2 free versions for you. And then once you get them, it'll put them right on your chart. I like the supply and demand zones, but I'm going to show you why they're not my absolute favorite. And I'll do it on gold. Not that it has to be my favorite, right? My wife is my favorite, but your wife will get pissed off if she's your favorite. So on the large chart, I'll show you what they both look like. Let me get rid of chart prime real quick. So now I have no zones. If I go to indicators and I run the supply and demand algo alpha, I always say alpha, I don't know why. It'll take a second to spin, but I'll show you what that indicator looks like on gold. It's pretty solid. Pretty solid. But it does take some resources. I can launch a space shuttle with my computer, so it doesn't really faze me. So there's those supply and demand zones. And if you look at them, they're pretty darn good. Same rules apply. It'll be resistance until it's not resistance. So if you didn't want to make the investment right off, Gene, that's a great option. The other ones are these, and I'm not so much a fan because I think they put too much space in between the areas they provide. So there's some way down there, but there's a little support right there, and it's effective, but I don't really have anything else above me. And I feel like it's an incomplete picture. but something is always better than nothing. Maybe if you want bigger moves, that might be a good option. But for me, the best bang for my buck is this bad boy. Chart Prime is pretty rock solid with what they do. I hope that was helpful. Gene, I know you're making the transition over. You want the best thing I could ever tell anybody about TradingView? The best thing I could ever tell anybody, and I want you to see this as an example from this morning. When these triggers are up, it's always going to be easier to go up with them. 99% of the time. Whatever direction these small triggers are going on the large chart, it's easier to go up with them. And until they actually pinch, roll, and head the other direction, we have 13 minutes before that's even an option. These are still up, which means if we pull back to an area, if we get a close on the correct side of the triggers, it's Longsville, population us, and there's nothing in the way for a really long time. Trading with the 15-minute triggers is huge. Jen, did I miss your picture? No. Here we go. Momentum, termination, termination, area inside of triggers. With no triggers on the large chart, no trade for you. I like it. What market is that? What's trading in the 7,000s? Is that the ES, Jen? Wow, I haven't even looked at an ES in a while. There it is. And I've got a little different look. So yours might have been there for a second, right? Now it's 2. No divergence. Pull back to the area inside of triggers. Hell, I can make a case for that one, Jen. Right there around 7,001 because the trigger lines tell the story. Nice. And with the momentum, if it breaks, got some pretty solid targets up there. Good job, Jen. A little bit of patience, right? Goes a long way. And right about here, you're like, damn it, they're going without me. And they're like, wait a second, we forgot Jen. Because they love you, Jen. They think you're amazing. Good stuff. All right, guys, that's my second hour. I'm going to rest my voice for a few minutes. When I come back, we're through all the pictures. So I would encourage you, I certainly can't force you, but I would encourage you to ask a lot of questions. Texas Equest, it's hard to say Equest. I'm assuming that's short for equestrian. Daniel 3, if you have questions. Danny, if you have questions. Guys, if you're here and you're evaluating the software, I want you to believe that I am absolutely full of crap. But what I want you to do, based on that, is I want you to ask so many questions about these 3 rules that you can go back and prove me wrong. Because if you do that, there's no doubt in my mind you'll be here for the duration, guys. You'll be one of those people with an X or a V or an XV next to their name. People that have been trading with Nexgen for decades because they know it worked and they finally learned how to swing that hammer. So I'll be back in about 5, guys. Go stretch your legs. Last hour home stretch. Jen, that long trade's looking pretty nice for you right now. Momentum, potential to break, pull back to an area inside of triggers. Guys, if you're new with me, I wish I could be more serious about the idea that that's all it takes. If you learn this one trade, you really do have the keys to the kingdom. It's pretty amazing. No momentum, termination, 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 termination. All that waiting, over an hour of doing nothing. Is it worth it? Is it worth it? The answer is a resounding yes. Miss Trina, triggers are down, in transition, pull back to the area, not quite a close below. I'm trying to figure this one out. So one of the things that we talk about is for a true close below, and I would let it be definitive. It's a down bar with both corners below the triggers, and this one was just a little bit early, but there it was right there. So there's your entry. Now, here's the challenge, and let me know what you think about this. You say patience, right? And this is where you had to make a decision. Whoops. See if I can, I don't have the numbers that well. Let me see if I can get the numbers on there. Your pivot high was right here, right at about 57. So you are in 52, 57. It's about $100 worth of risk per contract. This, above these one-to-ones at a zone, is approximately, and I'm just trying to do the math here and it's hard to see, closer to $200 per contract. You've had your pivot high, and then they tried to go up, right? And then they tried to go down again, and there's a new pivot high, and then they went up again, and you're still holding. And then there's the close below from the higher, which is darn near the same price as that one. So I'm not exactly sure how you picked your stops on that one, because that turned into a pretty big stop. Okay, that's a lot of faith. And I'm glad it worked out. Up, strong, breaks, pulls back, you catch it on the way up, target made. Very nice. Well, one of the things that happens, Trina, and for you guys can't see the question if you're on YouTube, she asked, should it have been behind the pivot high? This trade, by the way, is very nice, Trina. You let it break, it pulls back and behaves as support, you catch it on the way up, and that's an easy trade. Nicely done. So you're trading a 2-lot, right? So this is the difference between risking $200 on your trade from the weak side and risking about $450 per trade on the weak side, right? Trina, is this any more obligated to hold than this? It's not at all, right? And you've already been there, and you're on the weak side, and this is only a decision you can make. And you may say, you know what? I'm going to put it above the highest area of resistance, because in a downtrend, I believe that market's going down. I accept that risk. And I don't think there's anything wrong with that. You and John Novak could get together and go bowling. Me personally, I love the accuracy of the entry logic. And I would rather take a couple small losers rather than hoping that it works. Because from your entry from the mid-band, you got to the other side of the mid-band. And then the mid-band started holding, right? Mid-trend trade. So it's up to you. That's one of the questions that you have to answer for yourself. Am I willing to have that risk, or do I prefer the small risk and then I'll just take it again? And it probably adds up to the same thing, Trina. It's good luck. Good luck, good trade, big hold. Sure, Marika. Da, 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 da. There's the whole sheet right there. And it's the last page. And it actually shows you how to annotate for the best feedback, how to paste into the spreadsheet, like all of that stuff for you. And then if you have any questions or need anything, let me know for sure. Let's see what you did. Triggers are up. Entry and exit. I love it. So let's do this, Marika. Can we do a little tutorial on how to annotate? And I'm going to give you the whys as well. This isn't just me being a nag. Especially as you're learning, because I firmly believe, and science supports it, repetition creates recognition. And when you take the time to write something out, it sticks. It sticks better. It sticks faster. You begin to execute with less thought. So every time you take a trade, if you go back to those three concepts, momentum, path, and entry, and just describe them, right? Like how the rules are met. What you begin to do is these looks begin to have value because you've attached value to them. But what you've also done, and this is even more important, I think, Marika, is that you're actually writing your recipe for success. And what I mean by that is if you draw an arrow here and you say smalls, I'm going to make that a little smaller. You say small above large, space between, momentum, rule one met. And now what you're saying is like, man, I know this is a market that's hard to stop. This is my look. And here is the one that I think really helps out new users. Only two triggers above the divergence high. Potential to break. I may have to manage. Does that make sense on that part of the read? It's not quite a clear path, but the potential is good. So now what you're doing is you're creating this thought process. I've already got my management hat on. I know that I may have to manage just a little bit more assertively than normal. And then watch this, Marika. And this is only it's a 1 point difference. The language for entry is I will buy, not but, I will buy a pullback, which you did, at an area, you were a little bit early, inside of triggers. And now the difference between your entry up here, 5 ticks above the midband, and it was probably 7 at the time of entry. The difference between this entry and the rules-based entry is very subtle, but it's about 4 ticks. It's a $50 difference. Now I want you to see this. If you take that same $50 difference over the course of a trading year, it's a $12,000 giveaway. And that same $50 early added $50 to risk. Does that make sense? And this is why I think this phrase right here is the reason for the season. It's what makes what we do so effective. Because it creates a little bit of patience for the midman, which gives you a little bit less risk, which gives you a little more profit potential. And then I love it. It's not the perfect trade and you get paid. This is outstanding, Marika. But this little annotation bit, what it will do for you is it'll reinforce exactly what you're looking for, exactly why you're looking for, exactly how you're going to manage it. And it's the best written recipe ever for success in the market. Great job. Great job. I love it. Less than a week. I'm giddy over here. Momentum, 2 triggers through, no divergence, perfect entry, 2 lot, 200 profit, nothing changed on the large chart. Stop would have been at the fib. Where the market is likely to go. Jen, it's absolutely beautiful. Absolutely beautiful. It's nice to have you posting in the room again. So Marika, you're taking the exact same trade as someone that's been doing this way longer than you. The biggest difference is she made more money. Not because she's better than you, but because she learned the concept with all of this momentum and nothing in the way. That fib is an outstanding target. And with a little bit of practice, you'll learn to believe it too. Good stuff. Guy's making me proud right now. All right, large says up. There is resistance, so I'm going to manage well, staying vigilant to cut losses. Bought a pullback to the 1-to-1. You held it. All right. Should have waited for the price to be on the right side of the triggers. Probably would have got a better price. And then out at the trouble. Nice job. Thinking maybe a lower high. Why not thinking it was going to go to resistance? I like that. Odds favorable momentum. I was afraid it would go lower. Everything on every chart says up, but I was terrified that it would go lower. I'm going to get paid. I'll never get mad at you guys for getting paid. That's the whole goal, right? So Justin, what happened next? Your entries, you know where you're looking. You know what reduces risk. And I still think maybe down here from the 1-to-1s. But what happened next? It kept going. So Justin, here's your lesson for today. Because everything you've done is solid. And I know that you love what you're doing. So entries create manageable trades. With this momentum look, the market may, I won't say will, go higher. I can split contracts, right? I can split profits. I can hold. But if you go back and you keep taking these great trades, Justin, you're going to start noticing when your exit didn't make sense. You're going to start noticing when, man, because of this trigger look, because of that strength, because of the distance to treble, I'm going to let it get to treble. Because there's a little bit left in the tank there. Does that make sense? But that's your look. Strong triggers helps you with the management there. Great trade, dude. Great trade. I do think, I'm not sure what your entry number was. You could have avoided all that heartache just waiting for the close on the correct side. Good stuff. Wow, look at that. They blew through the area. And now there's 3 triggers through. And there's pullbacks to areas inside of triggers. But this one has divergence, and that's different because divergence is a loss of momentum. And I'm going to tell you guys, divergence is one of the biggest killers when it's only the potential to break. True story. Says so on the KISS plan. How are we doing? so far. I know all you more experienced users are like, I love the repetition. That Mark, what a guy. Daniel 3, how are you feeling? I know it's day one. There's a lot coming at you. Texas Equest, how are you feeling? Let me know how you're doing. Who else is in here? Brand spanking new. Marika, I know how you're doing. You're crushing it. That didn't take long. Phil, speaking of strong triggers, Mark, can you publish your 1 minute TV chart? I'm trying to get large triggers back on the chart, and it seems like your template is the path of least resistance. Absolutely. And it's not even the 1 minute template. That's the whole workspace. No worries, Texas. I just wanted to make sure. I'll call on you all the time, just so you know, all of you guys that are new. I'll say your names a lot because I'm trying to get you guys to talk to me. One of the easiest ways to do it is the conversation. But for the first couple days, if you're just laying in the wings, that's totally cool. I'll just send up a little signal every now and then to make sure that you're still with me. Divergence is the biggest killer. Let's see if they push lower. You're welcome, Phil. And let me know if you need help, man. This is where patterns pay dividends. Jen posted on her chart, no divergence. I'll take that potential to break trade. There's divergence. We'll see what happens. You didn't take this one because of the divergence, Jen? But what if it goes up? What if it doesn't? Right? What if flying monkeys carry me off to Oz? I don't know. It's either rules met or rules not. And this one doesn't fit the KISS plan. Let's go look at other markets. Holy NASDAQ, Batman. Look at that. Jen, there's your trade going the other direction. That NASDAQ moves fast. If you're brand new, guys, NASDAQ's pretty tough. If you're not brand new, NASDAQ can be pretty tough. And then crude oil, no momentum, no clear path down, no momentum to push up. Look at that. They went right from where we said. Pretty cool. Pretty cool. It's no secret I love the software. It's no secret I love to teach, guys. I firmly believe you should never have to do without as you learn with the software. You should never have to wonder what something means. You should never have to wonder if your trades were correct. All you have to do is post in the room. Post in the room and say, hey, Mark, what do you think? And Jen, look at that. There was divergence, and even TradingView says don't do it. You're more likely to get shellacked than you are to win. When both of these platforms line up, it is freaking magical, guys. Don't want to get shellacked. Those shenanigans lead to shellacking. And that's no good. Hardest thing you'll ever do is nothing, guys. Can't stress that enough. All right, I'm going to end the